Running a business can feel lonely, especially when the decisions get heavy. Welcome to CEO Whisperer by Saurabh Jain. Practical insights from the boardroom and the meditation cushion. I'm Saurabh. I've done 10,000 hours in three major parts of my life. I've spent 10,000 hours being a CEO, 10,000 hours being a board member, and 10,000 hours meditating. What we're going to do in each episode is really unpack a real business challenge that a CEO is facing and see if we can work through it together. Enjoy. So we have a very interesting chat with Rahul Lele. He's until recently, a senior product manager at AWS, leading a team of product managers here in Sydney. He's decided to go out on his own and set up a mortgage broking company. So the problem that he thought that he needed to solve was, how do I get my first 10 customers? But as the conversation evolves, it turns out that's probably not the core question that he needs to solve. He needs to figure out, how do I get, customer 10 to 90 to 100? And how do I make sure I service them with a cost base that makes my business economically viable? Super interesting chat. If you're interested in the mortgage broking industry, it's a great listen as well. Enjoy. Good day. Oh, good. Good. Second camera, we'll go this way. Good. G'day guys, welcome to another episode of CEO Whisper. So I've got Apple from Monetas here. Do you want to introduce yourself?
Sure. How do I? This is a good. I haven't thought about this. Right now, I'm trying to launch a new business. But before that, I used to work for Amazon. I used to run a product team there. Before that, woof, that was a long time ago. About a decade ago, I used to work for TCS, doing sales and consulting. Yeah.
Cool.
Brilliant.
Perfect. Well, do you want to tell us a bit about Monetas? What is it you're planning to do?
Sure. So the core value prop, the problem Monetas is trying to solve is, how do borrowers or homeowners get on the best possible loan? By best possible, I define as the lowest cost, which meets their needs, and stay on that forever.
Yeah.
Right now, the way it works is, you never know if you're on the best possible loan. I often find that, number one, people start off trying to find the best possible rate, and by the time we sign, which is like, a month down the line, you know that what is the best possible rate. You're like, I trust the guy. That's it. And then secondly, you're never on the best possible rate, because by the time you start and 6 months down the line, the rates have changed and you never go back and do a better thing.
Yeah.
So what I find is, typically over the life of the loan, if you have, let's say, $1 million loan, which is very standard, you will probably end up spending about 80 to 100K more than what you possibly could have, which is huge. And so how do I kind of remove that barrier and make people get what they can be the most optimal?
Perfect. That makes sense. So, the way we run these sessions, you're going to try to talk through a business problem that you're facing right now and kind of workshop that in a bit of time. So what's something that you're struggling with right now that you wanted to talk through?
Right. So right now, look, so this is where I'm at in my journey. Is, I've got a value prop. I've got a business problem.
Yeah.
I have got the licenses. I'm almost ready to go.
Yeah.
What I'm trying to figure out is, how do I go to market in the most efficient possible way? And it doesn't mean efficiency in the sense that obviously I would want to scale, but right now I want to prove that I want to get the product market fit. So let's say, how do I make a product market fit?
Yeah.
How do I find good market?
So it's really, is it that you want to get product market fit very quickly, or you want to get customers very quickly?
I mean, both is connected, right? I don't want to get customers very quickly so that I can figure out if there is a product market fit.
Yeah.
That's really...
Well, I think that isn't all the first. You want to get customers. That's probably the first thing to do, right?
Correct.
Without customers, it's all academic.
It is all...
Exactly. Yeah. So how do I get my first set of customers?
Yeah.
Yeah. And what would success be like for your first set of customers? Like, how many, how do you measure? Is it the value of the loan? Is it the number of customers? What's your metric?
It's about three things.
Yeah.
So I want the average loan size to be at least $1 million plus. Number two, the cost of acquisition for a customer should be, for the first set of customers, not more than $1,500. And third, the rate at which the customers come in. Like, if I get one customer at month, it's too slow. It's about if I can attract about 10 customers a week,
Yeah.
that's probably,
So it's really, how do I get my first 10 customers, average line value at least 1 mil?
Yeah.
Cool. So tell us a bit about your business. I mean, how did you come up with this idea? I mean, you're working a product team in Amazon. You finished up there, but what made you do this? Not just go get another, work at Microsoft or Salesforce, work at another kind of product company?
That's a good question. So how did I come up with this? I think one, I've always been kind of looking to try something new on my own. So I pretty much decided that once I'm finished with my current job, I'm going to try and do something.
Yeah.
I'll try it. If it works good, otherwise I can always go find out the role. And the question was, what am I going to do?
Yeah. And why did you want to go try something else? Because you have people that work to like, your TCS, the Amazons, you become part of this machine.
Yeah.
And that's where you get very good at working the machine.
Yeah. So, you do get very good at working in a machine, but the pros and cons are, if you work in a really good machine like Amazon, it kind of puts you, I mean, at least, okay, so when I joined, culture was quite different. Like, I think it was quote unquote entrepreneurial in the sense that you would have a lot of freedom to go try new things.
Yeah.
And as Amazon grew and grew and grew, obviously it became more, you felt more like a corporate leader.
Yeah.
Which is what started happening to me.
How long were you at Amazon for?
9 years. So I saw it like, I saw essentially, and by the time I was attending AWS, where I was working 5 times, which is incredible. But it's also, it became massive, right? So I had layers and layers of, I would call management between me and the eventual decision-making authority.
Yeah.
So it kind of became a little bit frustrating. And so I was like, I want to shape whatever I'm doing.
Yeah.
Have more control over what I'm doing. And that's why I'm going to try this.
And of course, you decided to do something by yourself.
Yeah.
How did you come to mortgages?
How did I come? So this I kind of stumbled upon because I was trying to kind of get, when we bought our house, I was trying to figure out my own mortgage. And then we went to obviously a broker. We kind of saw what he offered us. And then I was like, this doesn't seem great. So I kind of did my own research. And I found out that literally between what he was offering and what I could do on my own over a period of like the loan value, I could save 150K. I was like, look, I want to do other people. If you do this, it's yours. And he was like, look, wait, I can't do it. I can't do it for various reasons. One of them being that I don't bank to the same banks, blah, blah, blah. And I was like, that's silly. So I went to a few other ones and I couldn't get it. And I was like, okay, I want to do it by myself. Was able to do it.
Yep.
And I was like, this is silly. Why is nobody able to solve this problem? So I kind of delved into it. And then I realized a whole bunch of reasons, structural reasons, people to do it. I was like, this seems like a good thing where I potentially could like help people make money. And it seems like an easy enough value prop to tell the customer saying, hey, I'm going to save you of this money. And that's why I decided to try this.
Okay.
Yeah.
Okay, so you're in the game, you finished up or back on October, and you've been this for a month or two.
Yeah.
So what have you been doing for the last couple of months to get this up and running?
What I've been doing the last couple of months, I think one part of it at the beginning was trying to sort of the regulatory issues, like the way you do marketing is obviously because it's financial services, with compliance, to kind of say sign off. I have to go through an aggregator whose credit license I hold.
Yeah.
So they have to kind of agree on what kind of language I use, et cetera, et cetera. So that's one piece of work. The second piece of work is to kind of make sure that the value promise kind of flows through the entire process. So kind of figure out once the customer actually lands, how do you make sure you actually get them what you promise? So figure that piece out.
Yeah.
The entire, what I would call the standard operating process for how you kind of get the customer their loan and then keep them on the best rate. And the third piece was actually...
And just figuring out in first, like a Visio diagram, or to actually build tech?
No, actually build some part of it is, it's less the Visio diagram part of it. It's more to figure out how do you make the economics of the business work while also offering the customer the best value. So how do you kind of make sure that you're scanning for the best possible deal, but also not increasing your cost so much that you kind of, that's how you do it. That's the second part. And the third part I was thinking about was just like the step, build up side, make sure, everything kind of, you have customer facing collateral so that you can go with customers.
Okay. And okay, so you've got your regulatory stuff sorted out, you've got your aggregator sorted out, you've got your website, got the processes sorted out. So where are you now in terms of the launching journey?
Where I'm at now is I kind of need to give some finishing touches to the website, kind of figure out I think really I have some ideas on the go-to-market strategy as to how do I think the first 10, 15 customers, that's what I hope would be easy, but then how do I scale from 10, 15 to let's say the next 200? And because 10, 15, potentially I could tap friends and family. What happens after that is the question. So I've been thinking about that, and that's where my mind's been.
Yeah. And explain to me the value proposition. Why would someone go into monetize and sell it somewhere else?
The value prop was basically very simple. I would essentially commit to find them the lowest possible loan that they can potentially access. And effectively, I find that saves anywhere between 0.15% to 0.5% difference between what people have. And while the percentages seem small, in absolute dollar values, that's pretty high. So over a lifetime, you're talking about, 70 to 150K. In the first year, you would save anywhere from 3 to 6K.
Yeah.
So this is for a person who is going to do this, it's saving 5-6K sounds like good money for not much work for this.
If you have access to the same to the aggregator, I mean, how would your rate be different than the store?
Right. So there's 2 things that have to happen for me to kind of make it work. One is, even though you have access to the same aggregators, there's about 80 lenders, of which 50 are available through an aggregator. So choosing the right aggregator makes sense. One, but assuming,
you just show biggest to the most.
Yeah, exactly. So you choose the right aggregator. And the second piece is that within the 50 aggregators, you also have to accredit with different banks. So the big fours dominate the market. The big fours are not the ones that are going to offer you the sharpest rate because they already have. So you have to find the banks which will offer you the sharpest rate.
Yeah.
So you then have to go and separately kind of register with them. And that's kind of trivial, but that's not, because not everybody is accredited with them.
Yeah.
That's the second piece. And the third piece that you have to do is to actually then be willing to share part of your commission that you make to make sure that the customers are made whole, which I think most of the people are not willing to do.
Yeah. Okay. And so, you've found the cheapest loan. I guess any broker will do. You'll work with aggregators, you'll work with directly. I guess any broker will do. But I guess what you do differently will be you'll share some of your upside.
So actually, most brokers will not give you the cheapest part. Like,
if you still have to assume they would, no?
No, that's the funny thing, right? I mean, that's what I thought, that they would give you the cheapest possible loan. And the funny thing is they wouldn't. One, I think the first thing they will most of them do is like, get you stronger on the question, what is the cheapest possible loan? And that's a good question to ask, right? What is cheapest possible for Saurabh? It's not the cheapest possible for all, because, different LDRs, like different profile, all of that. So the funny thing is the lending rules are such that government has a regulation called first interest duty. And the rules are such that as long as you look at 3 different lenders and you find the cheapest between that, you're actually meeting the letter of the law. So most brokers will actually not give you the cheapest possible loan. So one is to do that, which I think I would say that most of them don't do. And then on top of that, if you actually also share part of
the consumer's not so up enough to then figure out if they're not getting the best loan, because they can Google these things quite easily these days, right?
You could. So I found the hard way that Googling would not be the right answer for the simple reason that, let's say, there are 3 ways you could potentially most people would do. You go to what they call a comparison site, like in you will go on a budget.com, you go something on that or cash out. Funnily enough, both of them, I don't think they will give you the entire list of lenders. So that is that.
Yeah.
And then even if you, let's say, hypothetically, you go and you see that, there is this potential thing, which is this lender is available for this loan. I don't know if you can qualify for that. The third thing is, if you go to 2 different mortgage brokers are restricted to the panel that they are accredited to, right? So the aggregators are restricted to 50. They only most of them kind of sign up with 1050. They are only restricted to the universe of 1050 now the 80.
Sure.
And then they are going to say, within the 1050, I have a 1050 and these are the best one. So,
but I would have assumed perhaps naively that the larger mortgage working firms like your Aussie Home Loans, they're connected with everybody. So they've got access to every rate. Is that not the case?
So Aussie Home Loans is only connected to 25 lenders. And I'm not sure why. But it's not, like, that doesn't seem to be the case.
Yeah.
Yeah.
Is that what, do you guys get different commission rates per lender, do you? Is that why they are cherry pick lenders, or is it somewhat homogenous?
I think it's a bit, so Aussie, I think probably, let's say, I think it's a bit historical, right? Most of the large mortgage brokers, they have had their existing maybe relationships with different lenders. So they have that, and that's what kind of ties them to it. There is potentially no real incentive to go to newer lenders. So that's one potentially. And the second thing is there's also a cost of the more lenders you kind of are accredited with, the more just bookkeeping you have. That's more admin work. And so unless and until, so there is no real incentive to change. Is what I've just, that's the summary of
But
it.
it seems like such a trivial solution you have.
I know.
But if it's that trivial, I'm sure other people have done it. Like what am I missing? What am I not understanding the complexity of this one?
Yeah, so I've spoken to a few people because I had the same question. It seems so simple and obvious. Why are more people not doing it? So there was, I think about 10, 15 years ago, there was a company called Refund Home Loans, which came into its
I remember those guys.
and then I kind of, so look, I'm a big
$2,000 or $3,000 back.
I don't know. I just would read up all the documents and going through his documents to see. And I think they failed for a couple of reasons, because at that point of time, they had a lot of franchisees. They had like physical storefront. So the costs were higher. And I think they couldn't make the economics of it work. So if you are passing on, or I don't know what that promise was. I think they would pass about 50% of their commission back.
But aren't they still about $2,000, they said?
Yeah. So one was the house prices were much lower than like it's just
Relatively smaller.
So the loan values were smaller. So your commission, you wouldn't get so much. And then if you're giving 3,000 back from them, so you're basically keeping half of the commission. And I don't think they could make the economics work based on what they have. What has changed right now is the house prices are that much higher, and so your average loan value is that much higher. And most of the people are very comfortable. I don't have a physical like presence, and if I can,
Haven't the banks reduced how much commission they give you percentage-wise?
Not proportionately. So it has compressed a little bit, but it has compressed over the last 30 years, but not in the same proportion as to where the house prices have gone.
Okay, fantastic.
So that's one.
So
anyway, so Refund collapsed because they couldn't make the commerce work. And then I spoke with a few other people, and they had a few interesting things to say. They said, look, I think eventually you will need to end up finding people to kind of do that. And they haven't been able to make it work with essentially several people. And so they say you have to kind of have people who are working on a commission almost. And so to keep them motivated, and then you end up passing on a lot. Say, again, commerce doesn't work. That might be true. I'm just curious to see, given that now where AI is, I first want to see, so the way I'm thinking about this is, going back to the problem, right? So if the value prop kind of resonates with the customers, which I think it should, given that it's almost free money, then can I use AI to automate a whole bunch of players, given where the state of AI is today? And then if the people aspect is very minimal, can they cover its work? And I don't know if the existing people have thought about this, or maybe people are working on it. I just don't know.
I've seen, but it's kind of like with Amazon, right? They've got the low cost operating model. You're trying to do that, but for mortgages, I guess.
And then you think about it, right? Why would you only stick to mortgages? Like, think about this: the largest expense that any household has. I mean, the most obvious answer is you spend most of your money on financial expenses. So if you take mortgages, insurances, and if you even treat your savings account as a product you purchase, that's the most of your money is. Why isn't somebody trying to optimize that for you? It's almost like a stream model, right? And you can easily go from, if you can solve this for mortgages, there's no reason why you can't solve this for insurances. Why you couldn't solve this for, I'm not going to get into investing because that's very personal and everybody, but why couldn't you solve this for making sure you're getting the best savings rate from your savings bank account? And then you have basically targeted a large part of the customer's spend. And then suddenly you're talking a lot of value.
I mean, because look, I think it sounds so easy, right? You'll get 10 customers. I'm sure 10 people with high loans. It's either refinance only, so that's easy. So everybody has a loan that they can finance. You've offered cheaper. I mean, if you look through the bulk and paperwork for them, so there's not a lot of headaches for them. So I totally get, you'll get your first 10 customers quite easily. But I think maybe the problem will actually be, as you touched on there, is that how would you scale this? Because when you're not paying yourself a salary early on, you don't expect to make money as an early on founder. You kind of work for free because of the hope of a future dream. When you try to scale, you're going to get the same cost base that all these other guys hit. You might not have offices, you might not have storefronts, you might not have as expensive people, but as you scale and becomes 2 brokers, 3 brokers, a couple of back office people, you're going to get stuck with the same cost base. Is that fair to say? Or do you think you can do something clever with AI or something?
Yeah, so that's the hypothesis, right? That's the hypothesis. So if I can, so one, I would obviously have a back office at some point, but I don't expect to be essentially like Quasi, right? I don't expect to have a shop in every street. Like, that's not the aim, because if I have that, then you're right, I would have similar.
Yes.
Uh, in terms of having smart people do it, you're right, I should have, but then the second part of the entire thing comes in is, can I make smart people more productive using AI?
Yeah.
And if I can do that, then there is real value to be made.
Okay.
That's really it. That's the two-part proposition. Like the value prop, the first part is relatively so quote unquote simple, and the second part of it is the how you use AI. So if, let's say, hypothetically a broker is doing, let's say, 3 deals per week, can I get him to do 6 deals per week?
Yeah. Yeah, and I guess, I mean, competitors like yours, there'll be the other kind of work from home brokers.
Yeah.
There's lots of brokers like the husband wife couple or 2 or 3 friends that come together and set up brokers that have got quite a low cost base from similar to yours.
Yeah.
They probably do all the work themselves afternoon or even got one of my cousins, like during the day he works for some telco, during the afternoon he does a couple of mortgage brokers things. It's a little, I don't think he's done that well out of it. It's just a side hobby for him to try to get some extra income.
Yeah.
So I guess they're the guys are going to compete against. So I get your hypothesis that, again, well, you will actually not have the same scaling cost as other people because you use tech more effectively, you use AI. But shouldn't you test that before you even start?
This is maybe me coming from Amazon, right? I think if you get the customers don't care if it's magical else or whether it's tech, right? I think right now, given that I've used the tech enough to know, and I've written a few loads, so I know where you could potentially use tech, that I feel reasonably confident. I mean, I might obviously find that it doesn't work at all, but right now I feel reasonably confident that there is enough tech in place at this moment that if you spend money to build it, you can build a platform which will be able to increase the productivity of.
Yeah.
Okay. That I feel that part to me seems less worrisome.
Yeah.
Than And the one and two mortgage broker people, the thing which I've realized is, right, if you're a couple of, let's say you're 5 mortgage broker shop, funny enough, 50% of their revenue comes from trade commissions, right? And I'm offering to give the trade commissions away right up front.
And so what are the trade commissions?
So trade commissions is the way people get paid is you get 2 commissions. You get an upfront commission and you get trade commission. So the upfront commission is effectively you get about 0.65% of the loan that you get paid the moment the loan settles.
So to say $1 million loan, $69,000.
Upfront when you get settled. And then every month that the loan is current, you get about 0.15% of the loan, roughly.
So 1,500 in that case. Okay.
Per annum, and you get that paid every month.
So 1,500 or 1,500 then?
1,500, so about $180.
Yeah, a month. Okay.
A month.
Yeah.
And what happens is after a few years, if you have been in the business for 2-3 years, 50% of it comes from trade commission, which is your existing loans, which are just paying you money. So these people don't, and that's why I'm saying they're not motivated to find the best deal for you because they are actually getting a whole bunch of 50% that comes from these loans. And so that's why they're not motivated. Like it's just a simple motivation problem, right?
Yeah.
And if you're not motivated, you're making enough money. So that's what a whole bunch of people said. Why would you?
And I guess with new customers, they'll get the upfront commission. They'll put another upfront from you.
Yeah.
I mean, so if they refinance you from one bank to another, do they get another upfront?
You do, but then what happens is you keep the upfront only if you're with the same bank for 2 years. There is a clawback. If you can't change banks within the 2 years, then you get a clawback based on prorated, based on what duration you're.
Okay. Yeah. So really, they should be incented every 2 years to churn you out to somebody else, should they? Or
they should be incented.
I mean, my experience is they tend not to.
Yeah, I think I don't understand why they don't tend to, but I haven't seen that as well.
Okay. I mean, maybe that's to believe that AI will automate it. That makes sense. I mean, if it isn't there today, it'll be there.
It will start.
It'll eventually get there. Are other brokers trying to do the same to reduce their cost base by using this kind of tech? Or is it more of a traditional kind of area?
Look, I think if you're a 1 or 2 person shop, I think you might be trying to use AI to kind of reduce your cost base, maybe. But I don't think they are trying to pass that value back to the customer one.
Yeah.
So I'm not sure what's happening behind the scenes. I'm sure I can only believe that they are.
Yeah, I don't think anyone's giving value back.
Yeah, I don't think anyone's giving value back. So in which case, so there is that extra margin to be had there. I suspect the people who are probably trying to use this the most are the larger ones. I would presume the bigger ones in the market that you see would be super motivated to try it. But again, I don't think there is any competitive pressure to kind of offer that value back.
The big companies never implement tech effectively, right? It will cost them millions or take them 10 years.
Yeah.
Or they got proof of concept, after proof of concept, they won't get funding.
Yeah, I think it's just harder. Like I always see this, right? If you run an existing business, like you have to be a tech business to be able to do that.
Yeah.
But if you're not, then you're just going to come up with it.
Okay. Makes sense. And how did you figure out that getting money back is what customers want? Because my experience is getting money back is amazing. But, when we bought our last house, it was more about who can actually get you this loan approved, because we were like right against the edge.
Yeah. So I think there is.
So for me, it wasn't getting the money back.
Yeah.
It was actually something else that I was looking for.
So you're right. I think people have two things in mind. There's two different types of customers. One is who are trying to buy a new house. And once you're trying to buy a new house, there's a different set of criteria. Like you said, most people want the good enough to you. They don't want the best to you. And depending on what your circumstances are, you're just trying to make sure that you have a loan that on the day you settle
gets approved. Yeah.
That's good.
Yeah.
And then once you've actually paid down the loan a little bit, then people kind of start thinking about, hey, can I make this better?
Yeah.
And if you can't, and I think that's where it comes in, right? Also, what I've realized is, and I haven't seen this happen, but most people, like I think, the simple fact of the matter is when you're signing like the biggest, largest purchase of your life, you have so much anxiety around things. You just want something that will help you close it.
Yeah.
And once you're done, then you're in a better frame of mind to say, okay, how do I optimize it? Because, half or 1/3 of my income is going to.
You can't do the two stress at once, I guess.
Yeah. Yeah. And that's why I think the refinancing makes sense. Where you're like, hey, your loans already settled, everything's down. Like,
so you got time to just refinance it, I guess.
I'm happy to look at people who want to buy a new house as well. Like, I'm happy to do that as long as they reach a certain threshold. Like, obviously can't, be spending because people who are buying new houses also, it takes much longer. So you're spending a lot of time.
It takes 3-6 months, right?
Exactly. So I'm happy to that say this is what you have at this moment. But, some people just need a lot of hand holding. That I don't think that is part of the business. And this until I get. At some point, I'll have AI good enough to kind of help, so they can just stop the AI like they talk to.
Yeah. Wait, is it very different than your models like UBank? Like UBank don't do new loans.
Yeah.
They'll do online. You can't be somebody, but then they're having the best rate because they tend sometimes have the best rate, not always, but they tend to have the best rate because they've got lower cost.
Yeah.
Is your model kind of analogous to that?
It is kind of similar to that. Yeah. It's not that. The only thing which I would say different from you.
I don't get money back.
It's not about, so the money back for me is not the main promise, right? The main promise for me is, hey, I keep your loan optimal throughout the lifetime of the loan. That is the promise.
Yeah.
How do I do it? Just really, whether like if I give money back or I find the best loan, like obviously I have to be code, but that's the promise.
Yeah.
And I don't know of any other lender/broker which is willing to make that promise to them because it's not in their interest at the moment.
Yeah. Okay, makes sense. So going back to your original question, how do you get your first set of customers, your 10 customers with a reasonable enough loan value?
Yeah.
And what's your current plan to get those guys?
I think the first set of 10 customers, I think simple, friends, family, colleagues.
Yeah.
I think, try and get that because they know me, they probably will, the trust value is, is not there. Like they trust me, be like do the right thing by them and then not kind of do it over. I think the interesting question is how do I go from let's say the 10 customers to the 100th customer? Like at some point I will run out of pool of friends and family.
You only have so many friends with mortgages.
Exactly.
Sign up with you. It's much better to get somebody else.
Exactly. I think that's the interesting question for me.
Yeah. So maybe can we redo the question? So really, how do you kind of get from 10 to 100 customers?
Yeah.
But the problem there is then you're going to actually have a cost of acquiring customers.
Exactly.
Right? Can't just be coffees and lunches, all right?
Yeah.
To people and if you have a cost of acquiring customers, but you're not keeping the upfront money for yourself, won't there be like a capital outlay you're going to have to start putting into the business because you're going to get trail over a long period of time?
So the trail I'm not going to keep. So the trail is not what I accumulate. I would keep part of that. I would keep the upfront depending on what is the benchmark. So the way I think about for each person, I'll find a benchmark for you, which is from the pool of all the lenders that I can see available. And that's what I'm going to try and match from the pool of lenders I have access to. And if there is a difference, let's say, right now, the benchmark for you is 4.75, I can access something at 4.95. I'll make the 0.2% whole by giving you part of.
So you'll give up part of your trail to help give it a better road.
Yeah.
Yeah.
Then that's the.
And the mechanics like you do that, does it?
Yeah. The mechanics allow you to do that. That's a big.
Okay, so it's more so you'll kind of give up your trail, but not necessarily be upfront.
Yeah. I mean,
because
it's more it's money, right? It's just money coming in at different streams, whether you call it upfront. It's
money coming up in different times. Because if we, for example, get 90 customers straight away, let's say over a 2 or 3 month period, you're going to have a huge cost to process them, right?
The cost to process, yeah, sure, yeah, yes.
But then if you get upfront money, well, that's kind of okay because that money
correct
is very, very aligned to when your cost base goes out.
Correct. You get money paid like 15 days after you kind of settle your cost. It's the money comes in. It's not a huge way.
Yeah. And how long would it going to take for these first 10 customers to happen? So we're 31st December today.
Yeah.
Like, well, what's your time scale? How long do you expect that to take?
I would say maybe 2 months.
Okay.
Yeah.
So like the end of Feb, you'll have your first dozen or so through the system.
Yeah.
I think that's worked out. And how long does the growth refinance generally take?
The process actually is not that long. I think depending on the lender, it can take anywhere from like some lenders quick, within 2 days. Some lenders are little. Like net to net, from the start, I get access to the documents to the day it's settled. Let's say between 3 weeks at the max and about 1 week if.
So sometime in March, you will be all up with those 10 people.
Yeah.
So you'll make sure the system works, make sure it works, make sure they're getting enough money. You can get better deals. We'll get your internal processes working.
Good.
And then what are you going to invest in? Whatever AI tech you're going to have to help automate the process?
So the way I'm going to do this is first get the first set of 10 customers. Then I'll only hire a few people. Then I'll try and go and look for the first 10 customers. I don't think I want to tell me if there is product. I'll not forget product market fit. That is even the value prop is resonant, right? Because what they are going to do is people are going to trust me and they're going to be like, fine.
Yeah. Because if it was the same cost, they'd probably do it. Say no, you kind of, yeah.
So that is not going to tell me.
So don't small.
No, I'm fine.
Yeah.
So that's not going to tell me much.
Yeah.
I think the next set of, let's say, 20 to 100 customers are going to tell me more because those are people who, even if they're, let's say, friends of friends, I'll have to probably convince them more. So that's going to tell me if the value proposition is resonant.
Yeah.
And then to kind of, because I think at that point in time, I won't be able to process the volume by myself. So I'll have, let's say, my cost people kind of helping me with that. So I think the next set of investments will be in kind of hiring the right set of people. And once I've done that, and I feel like, okay, now I know exactly what problem, like which are the inefficient points in the system, then I think it's the time to invest. I think there is multiple places where you could invest. You can probably invest in trying to be more efficient in getting more customers. So you could have, right now I have a calculator which kind of gives people an idea of how much they can save, maybe double down on that, or maybe go and try and build tech to make people more efficient. It just needs to be seen where that needs to be made.
Because I think your problem won't be the value prop. I think that's the obvious, right? Like,
that's what I feel. Yeah. Like I feel it's simple enough to say, hey, this is the money, sign up, this is your money.
I think you're going to find it easy enough to get customers, however you advertise, you'll advertise, and you'll get people on board and they'll come through your process, they'll give it a shot. I think your problem will actually be is how do you make sure you can still make enough money for yourself to run this company?
Yeah.
I think it's going to be more of a cost-based problem and not a...
Since the cost play, you're right.
Yeah, it's going to be, I don't make sure my cost base is right so I can continuously run.
Yeah.
Because, if you use the Amazon, they're the guys that pioneered the low-cost model, but they lost billions and billions for years and years and years. And that's how they kind of got to that's how they got to the scale. That's how they can compete on that.
That's true.
So I wonder if that's the actual thing to figure out. How do I make sure I either have my cash reserves or manage my cost base or not lose too much per loan? Lose nothing, but not lose too much on the first part of the loan.
Yeah.
So I don't kind of grow myself broke doing this.
That's actually a good point.
So I think that's what will get you on. I don't think many customers are going to be the higher part.
Yeah. You're probably right. In which case, I think after the 22, let's say 100 customers have come through, then it's kind of honing in. I want hypothesis to be part of the process are the most time consuming and where, you kind of need to double down to kind of have tech simplify things. But then really test it when people are done it because, experience of 5 cases versus experience of 100 cases is quite different. And once you have enough evidence to say, okay, these are the bit and the double down on investing there to kind of simplify the process. And then reduce the cost base. Like the whole point is going to kind of keep on reducing the cost further and further. And increase the efficiency of the humans who are doing the work as much as I can.
Like, you need a huge cash base to do this, right? Because I figure it's going to, I mean, for your first 10, your cost base will be the exact same as everybody else.
Yep.
Probably higher because you're theoretically paid more than a junior clone to for your next 100, well, you might get a couple of people, you might have them offshore, it might be a bit cheaper, but everybody does that anyway.
Yeah.
You might have a few local people helping you, hopefully 20, 30, 40, $50 an hour, whatever it is. Because I reckon to get some sort of AI model sorted to make it more efficient, I don't think it's like I think it's like a 3 to 6 to 12 month task.
Sure.
Kind of figure out different choke points and optimize that one, that sort out the next 5, sort out the next 5. So how do you make sure you don't run out of money during that 12-month period? Because you're going to be paying people salaries, right? You're going to have costs, you're going to have an office, people have to sit in it.
Yeah. So how do I? Yeah, that's a good question. At some point, I'll have to raise money. From what I see, at least, so there is like, how would I put it? Orders of difficulty of the problem that needs to be solved, right? So I'll give you a more concrete example. So right now, the way the process works is people give information, and I plan to use open batching tools to try and make it as simple as possible. And then they kind of give you all the information, and then somebody has to kind of sift through that and put it in aggregator system.
Yeah.
That actually takes a fair bit.
And then you feed into the system, do you? Or
these guys are feeding into the system. That takes a fair bit of time. They just keep kind of sift through the information, key into the system. But that's one place where you could potentially use tech to simplify it.
That's an agent model that
exactly.
gets me.
Then the second part of the information is, I think once you feed into the system, I think there is the document generation that you have to create a comparison to report of some sort. Which is mostly automated by the systems that are currently in place. But then I will have to tweak it because I'm not doing exactly what every broker is doing, because I'm potentially back and get some money back, blah, blah, blah. So I think there's some intelligence in there. That is the second part. And the third part of the piece is then once, let's say, the customer said, yep, whatever you're recommending is good, or we change the recommendation to something else, blah, blah, blah. Then probably we do the work and then file it. So those are the rough steps that we kind of go through. Most of the work seems to be around kind of getting the data, because that seems to be the hard piece of the work. So simplifying it for the customer, because that's where most of the drop-off is. And the second part...
And how we simplify it? From being more portal that can upload documents to or something?
I think that's not even the most important piece. I think some of the problems are around making sure that customers just don't... If you have 3 banking accounts, if I'm asking you to get... let's say, go and get 12-month statements from each bank account, just like, and people just find it cumbersome.
Like, it's work.
It's just the effort, right? It's just convenience. So if I can make that convenience and there's open banking to help there, I think that's where some value is. To make customers' problems simpler. So they have
to log into your system, you'll connect to their bank account.
Of course, there's the suck out statements. And then some of the things that I can't do, like, for example, ATO won't give us access to that talks to that, and then you need to go to your rental, but it's blah, blah. Try and make the document collection simple. That's one. And then put all the collection information from the document, documents that are generated, into systems of the lenders, so that you can find the best possible one. That's what it's saying. So that's where I think the next kind of rapid.
Well, do you have a view as to...
Sorry. So once you have done that, right, I think there is simpler solutions that you can do, and there's very complicated solutions with it that can be super seamless solutions that you can do, which kind of suck in everything and then spit it out, and then no human has to touch it. That will probably would require maybe a few $1 million of investment. But I don't have to start with, right?
It sounds very simple stuff.
I would start with simple stuff. Like if you're getting documents, you can use simply assistants to kind of get the first generation out, and then have a human kind of re-verify it. So that they aren't the key, they just have to re-verify the information is accurate. So I'm saying there is, like, I would have to start spending millions of dollars, you then spend not even hundreds of thousands, tens of thousands of dollars, and gets it.
And you probably do that yourself, it's not complex.
I can probably do that, or I can also, whatever, I think, and then you can build as I can see the volume coming in. You can make it stage design and say.
That makes sense. So do you have a view as to, when you do your first 10, you're doing a manual, you're doing it by yourself, be giving a bit of money back, which you otherwise would need to cover your costs.
Yeah.
Do you have a view? Will you break even for those 10 loans? Will you lose money? Will you still make a bit of money out of it?
I actually expect to make money out of those stuff.
Mm.
I still expect to make money out of that. I mean, depends on what to pay myself.
Yeah.
But let's say I'm paying what I would pay if I was an employee working in my own firm, then I would expect to make money off them. I wouldn't expect to make huge money off them, but they would be important.
But that only works, and it's one thing that only works if right now the margins are insanely high in this work. Because you're saying you're actually giving up a big chunk of margin back to the client anyway. If you're still making profitable, that means today the margins must be very high, which might be the case.
So I think again, this might be me being naive. I think the markets seem reasonably high, right? Like I think so. The way I would put it is you get about every year about however, but let me do the math. You on a $1 million loan, let's say you get about $6.5 grand first year, and then about 1,800. So that's roughly say 6.5 plus $2 grand, 8.5 grand for the first year, and the next year you get it in like a little bit less than 1,800 because
they paid off some.
You paid off some, or you paid in 1,500 and $1,000. So over a 3-year period, you're getting about 10 grand.
Yeah,
and I don't think that's 10 grand enough for work to be done.
You know,
how much of tell me, how much do you? It takes about, let's say, for a loan which is complicated, it takes about 20 hours of work, which I'm overstating. Even if I pay 20 hours of work, for me, and let's say cost of acquisition is say about 15 minutes cost, right?
10 grand's worth it,
It's still not 10 grand worth of work.
Although, I mean, so the analogy I'll give, it's like when Virgin Australia first launched in Australia. So they only had one plane. They had the 737, whatever model it was. So they had a very low cost to operate because they only had one set of planes, one set of technicians, one set of parts. And that's why they were able to compete a lot on price right at the start. But as they grew, 5 years later, they had to buy other planes and, complexity kind of came in. So I bet for your first 10 customers, which are just refi customers, probably the cost is quite low. But then they're going to come to you and you're like, hey, you did this refi for me. Now I want to buy this new house. And suddenly the complexity is much more. Or they want to be like, oh, I want to buy something more super fun, that might be more complex. Or I want to buy this structure, like more complex. And they might suck you down in lower margin deals.
That is true. So I've thought about that, right? So the way I think about that is, the way to think about it is not on a per incremental basis. The way to think about it is the customer lifetime value, right? So let's say you're a customer, I'm just making things up, right? You have a property portfolio of a few $1 million, let's say $2 to $3 million, which doesn't seem to be out of reach for most cities. You have about 70% on aggregate in loans. So on a $3 million, you have about $2 million in loan. I have to look at it from on a $2 million portfolio, portfolio. Let's say you have 2 or 3 loans. Even if one of them is super complicated because you have SMSF and it's taking me a buttload of work. The other 2 are probably easy on an average. It still makes it worth all the budget. And the other thing you have to realize, right? It's very complicated the first time you're getting the loan down. But the second time you are refinancing it after 3-4 years or 2-3 years, it's not that complicated because you already have the paperwork, you have set everything in place. You probably paid off, let's say your loan to value ratio has gone up. Better. And so it's a 30-year cycle, right? So you have to keep the long term in mind. This is a long term game. This is not, I have to make all my money in the first deal. That's how you have to think about it. In the customer lifetime value is actually this is potentially the largest purchase most people are making in their lives. And so it's really high dollar values you're talking about.
So I get it, right? So I get the acquisition won't be hard because you'll have a unique problem. I get processing, you still seem to make money out of it. You'll automate it, reduce your cost base. If you offshore it, will be 10 bucks per hour, it'll be even cheaper. Why isn't everyone doing this? Why is there not 30 people like you doing this? Like, what's the complexity that I'm missing?
Yeah, that's a good question. So I have been asking myself this for the last 6 months, right? I've been going with this for 3 months before I quit. And I've been asking myself the same question. What am I missing? Why aren't other people doing this? So I can, because obviously I have a big blind spot to this. So I just did the answer that maybe we can brainstorm what I'm missing, right? So the answers I have heard range from, the interesting answers I've heard from, the first answer I heard is you would have adverse selection of clients. by that, I think people said, look, if you are trying to give money back or if you're trying to find the most optimal deal, what people will do, you'll find is you will find customers who are constantly chasing the best deal, and they will constantly keep on trying to be
much out of you.
and there's time of you.
Yeah.
To me, the answer to I've thought about that. And I was like, yep, that is potentially possible. But again, my value prop is I didn't make sure you are on the most optimal loan that you are.
So you'll turn me to another product yourself every
I'm very happy to churn them myself. And even if I have to churn them even within the 3-year period, then I'm potentially happy to do that because again, I have the 30-year window in mind. So even if I were not making money in the first year, I'm hoping to make money over the 30-year period. So it's potentially in my benefit to keep them as long as they meet the threshold, right? If you have a 500, if you have a loan of 500K, you probably, or 500K maybe still on the margins, but if you have a 300-400K loan, sorry, I can't help you right now. But
everyone's got $1 million loans. Like,
yeah, exactly.
Yeah.
So that's one. That's an answer I've heard. The second answer I've heard, which I think is actually probably more interesting, is this is from another person who had a just mortgage broker. He said, we tried the salaried broker model where he said we would pay broker salary, we would give them leads, and then they have to kind of make sure that they close the deal. And he said they couldn't make it work.
What's that? Yeah.
Yeah, he said just that he couldn't find people motivated enough by salaries. And so we ended up throwing, so we went from a commission to salary, couldn't make it work, and then we ended up going back to commissions again.
Yeah.
So that I think is probably the more interesting part of the myths that what I haven't figured out, what I feel should be easy. But that again was, he said that he tried it 3 years ago where FAI was not in the place where, so they had to rely on doing all the work. And maybe that's the complexity I'm missing, which is, and a few other people said, look, I think what you're missing is, this is potentially this is for most people, the largest transaction of their life. You need to build trust. And most people don't have trust talking to a computer to do this. So you need to have front-facing people who you need to pay a lot of money to kind of do this.
Yeah.
Which I kind of agree with. Like you need to have front-facing people. But then it's the same question. How many front-facing people do I need, and how much do I need to pay that to make the economics work? And maybe that's what I'm missing, that I can't make them efficient enough, or front-facing people need a lot more money than I'm expecting to pay them.
Yeah, there's probably a couple of things there. I mean, I would probably agree with the first one that said maybe just scrape the bottom of the barrel. These guys will just trim it.
Yeah.
Maybe I think, but you're right. If you kind of keep them happy, keep them a good rate, they'll probably hang on to them anyway. And then they'll be less likely to churn on to somebody else because they're getting such a great deal from you. So I totally buy that. What was your second?
The second one was that I need to pay large commission. First, the brokers need to pay a lot more than I think they need to be paid.
Yeah. So there's two parts to that. One was, do you need brokers? And like with Eubank, or we just sold one product that was my only one with them, but they were fantastic. They were online. They didn't have to talk to anybody. Didn't have to be friends with anybody. Simple system. I knew what to do. I would call them up whenever I needed to. So in that case, I personally, tech savvy kind of person, didn't need it. And I reckon everyone under 20 or 30 or 40 will probably not need a broker. Maybe your older uncles and aunties will probably want to talk to somebody. You can help them log onto the internet.
That's my hypothesis as well, right? The generation that we are with, even the 30 and 40, because 20 years old not owning houses, 30 and 40 year olds do. And they're probably happy not to talk to people if they're put in a system.
And plus, those guys are probably doing, your $3, $4, $5 million purchases while your 20-year-olds are buying $500,000 houses, and your 60-year-olds are paying off their house and not buying anything anyway, or they've paid off a lot of their debt because they bought the house 20 years ago, so there's not that much to refi anyway.
Yeah.
On the broker, so that I see it as more nuanced about whether you need a broker to do the sales side of things. Because it probably depends on that. If you're going to spend all your money on online marketing, drive them to a portal, have them sign up themselves, well, then you don't. But I think what you might find, the analogy I'll give is like with real estate agents and like with recruiters. Every correct recruiter works for themselves.
Yeah.
Because they all of a sudden see, okay, I'm generating $1 million worth of commission. I'm getting paid $500,000. That's not fair.
Yeah.
I can do this myself. Every great real estate agent goes out and does this themselves. Every time you buy a great home from an agent, and they're really good, 2 years later, they'll have their own brand, they'll buy their own franchise. And maybe that's why people pay brokers so much. So they actually don't go off and do it themselves. Well, what kind of salary do brokers get these days? I don't know that market. What's the is it all commission? Is it base and commission?
It's always based on commission. I think whatever I see, from whatever.com, I think brokers get paid anywhere from 150K to like 500K, depending on
160K base or
150K, like all in to about $500,000.
wow, that's crazy.
Yeah, it's crazy, right? Like, I mean,
we can't afford to give a lot of money back if you paid someone half.
yeah, and so I had so I thought about it as well. I was like, look, I need to test this out. The other reason that the brokers might be mean to do a whole bunch of sale is because if you're doing what everyone else is doing, then you need to sell. And you need to sell based on how personable you are, how much trust you can build. But if my value prop was and my value prop is this, right? I encourage people to go seek other brokers out in the market. And I'm like, you have two processes running aside. If I can't get you a better deal and match you same day. So maybe I'm hoping I actually might not need to have these superstar salespeople brokers. I need to have, because what I found in working with people also, the people who are very good at sales are not necessarily good at processing transactional work. Yeah. I'm thinking I need people who are very good at transaction work, understand the nuances of zero-rated, who will get things done quickly because the sales has been done by the value prop and by hopefully word of mouth and the website.
So is your model then trying to figure out how do you not need as many brokers?
Not as many brokers.
It's not the brokers.
I think that's still be brokers, but
Yeah.
one is not as many brokers and not as many brokers who need to do the sale for me. So
Lower skills or lower cost brokers.
So the mental model I have is, think of it as the Apple Store, right? The Apple geniuses, they are not there to sell the product. The people are already sold when they get to the Apple Store. They are just there to help figure out what the right thing is for them and to get them out of the store as quickly as possible. That's the mental model I have. Versus if you go to a JB Hi-Fi, they're there to sell the product. I'm not trying to be a JB Hi-Fi.
Okay. So then you just got to make sure that however you acquire customers is super effective. If it's not going to be the brokers, because that's a super expensive way to do it. And it kind of makes sense if they are paid, $500,000 a year. It totally makes sense why commissions are so high, because you've got to fund that person and the overhead and the back office.
Exactly.
And then it makes sense why other people can't afford to give anything back, because if you've got to fund the salary, there's actually not a lot of money to give back to everybody.
Absolutely.
So then you've got to figure out, So I think the thing they figure out in your model, and maybe this is what you're thinking, is how do you make sure that you actually don't need the brokers, or that you need kind of cheaper, lower skill kind of brokers?
I wouldn't say lower skill. I would say different skill, right?
Or more economical, right?
More economical. I want people who are more detailed. Once they have come in through the door, they can quickly sort them through and put them in the right place as quickly as possible.
Well, they have the sales finesse you need to get these deals, though. So I assume that's why these brokers are paid a lot of money. I assume they've got attention to detail so they can do the application.
Yeah.
But they're very friendly, they're very salesy, they'll follow up, there's all that kind of thing. They'll spam you, email, text you afterwards to get the deal.
Yeah. So I think,
and that's probably why they paid so much, because they have that sales acumen.
So that's the current business model, right? Like I think what happens is what they will tell you, what most brokers will tell you. And I think part of it is true that they will come, they will listen to your problem, and they will suggest innovative solutions for you, which you potentially may not have thought about. So this is again where I think, yes, that is true. But again, where I think AI is going to be hugely beneficial. I think, because there's only so many different permutations, combinations to buy a house.
So AI
this is 100% AI. So there is only so many patterns, and you can fit yourself into some pattern. And yes, a smart man can help you figure out a pattern, but this is something which, given time, and I'm not talking years, I'm talking months, you can use AI to kind of solve that for you.
But I think what brokers give you, and I'm not going to talk to the brokers that I've dealt with, I've just assumed they've got some little back office figuring out how to do the deal. But it's them sitting in your living room, selling to you, convincing you to use you, not that. Convincing you that, hey, this refund, all this, give some of the money back is actually real, and we'll actually look after you, and I'm your buddy, and I'm going to buy you lunch once every 6 months to make sure things are okay. So I'm hoping, do you need that? Or do you think that might not be needed anymore?
I'm hoping that's not needed anymore. Right? Like, I think the way I think about this entire sales process is, you are going from, at some point, people thought you could only buy shoes in the store, and now people are very comfortable buying shoes. And at some point, people were like, you absolutely need to be in store to be, and that's what I'm thinking. And that's my hypothesis, that I will be able to scale if people are ready to shift to a model where you don't need such a high touch, a lot of giving a lot of cuddles and, lunches, and people are ready to be like, okay, if I convinced that this is potentially the most optimal thing I can get, then I'm happy to engage with you and get on with it and be efficient about it.
So then for your first 10 customers, would you consider only giving them the amount of love and time that you could actually afford to do?
Yeah.
And treating them with the skill level, you dumb yourself down to the skill level as if we're one of your brokers doing the work. Because actually product market fit, right? To figure out, could a 150K broker do this work and sign this customer up? So both made out you could do it, but you aren't that 150K broker. You're a lot more skilled.
I mean, you're absolutely right. If I try to do it, but honestly, here's the thing, which is really happen, right? I suspect what's going to
You're going to want to win it.
I'm going to want to win it. So I'm going to go all out, and potentially I'm going to shoot myself in the foot. Like in the long run, I'd be very happy getting the 10 customers, but I potentially might. I think that's why the 20 to 100 customers are more important. Well, I will have somebody else do that, and I see if I can be able to do that in the same way.
That's true. I mean, you can do it only at the first 10, 20 or the next 100. Anything is fine. But
I think you're right. I think you're absolutely right.
Because I think that's the actual product market fit. What's a better word than a done broker? What's a better word? Like an entry level or transactional broker, or what would we call them? What would your CDAD be?
I like how Apple calls them Apple geniuses.
Yeah, the broker genius.
Yeah, that's for a broker genius who doesn't have to do a lot of things. Like who is more efficient in getting you the loan that you need.
So is that what you really want to test out for the first 10? Because I know you'll totally go all out and insert some, and you also to do that lunch, all that kind of thing. But you won't figure out if this model works or not.
Yeah, that's true.
And then come March, you're going to recruit somebody, and then you're going to figure out, and you'll be like, oh, I should have figured that out 3 months ago.
Yeah, so that's what, I keep on going back and forth on this, right? I think one of my friends who also has his own company, he was saying, maybe you shouldn't be trying to get your friends and family for the first 10 customers. Because when your friends and family are coming through, you won't have to sell them as you are selling to, say, somebody who you don't know. So you won't know if you are actually, but your value prop is resonating.
Yeah.
And so he was like, why, if you don't care about learning from those 10 deals, why would you try? Not avoid them, but if they come through fine, but they don't go chasing them, go chase people who you don't.
Well, you won't learn what you're trying to learn by learning it.
Yeah.
But I think there's 2 parts. One, I'd say you still got after friends and family because there's a low cost of acquisition.
Yeah.
But I'd say go after them with the level of service you want to offer every customer.
Yeah. I think that's what I landed. I think there is learning to be had for the first 10.
Yeah.
And there's different learning to be had for, as you pointing out rightly, that I need to be able to kind of test the actual product, which is not a lot of high touch, be more efficient at kind of processing them and see if the sales collateral I have is good enough for them to do the sale.
But the big thing I'm challenging you with is, though, I reckon that's what we do for the first 10 as well. Not just.
Yeah, I know. I know you're saying that. I agree with you. I agree. Yeah,
I know it's hard.
I don't know how I have the self-restraint to be able to do it. Yes, I think you are very right there.
Although you'll have to do it for the next 100 anyway.
Yeah, and then sooner I quit. That's why.
Yeah. Because you might find that, worst case scenario, you might find out being low touch, broker genius just doesn't work.
That's it. That's what most people have to admit, that it's not going to work. Like, this is a high touch business. But then again, my hypothesis is low touch broker genius might work for refinance. I know it will not work for a new home buyer. I understand that you're buying a second or third home.
So you might have 2 tiers of brokers. You'll have a very expensive $500,000 broker that does new business. Maybe do that because the customer value is worth it.
Yeah.
Money. And you might have a broker genius, which does the simple refis.
Exactly.
But I reckon the upside, if you can restrain yourself, is you want to figure out if the broker genius model is not going to work. You want to figure that in February, not in July.
100%. As soon as I can figure it out.
Because there might be things you need to change. There might be process improvements. There might be website. You might need to up your marketing spend.
That's true.
Conversion might actually be really low with a broker genius.
Yeah.
Well, what is typical conversion for this industry if you go meet a client for the first time? In refi specifically, is it 1 in 10, 1 in 5?
I couldn't get good numbers on it. I've seen anywhere from 1 in 10, anywhere from 2 to 10%. Depends on where if you're a website-based broker, which most of small shops don't tend to be. Most of them tend to be
People-based.
paper-based. And for them, it's like 1 in 4 or 5.
Yeah. Because I think what you might find is the reason people pay brokers so much is they up their conversion rates.
Yeah.
They improve them, right? So a broker genius, if I'm a super motivated customer, that's probably fine. Because I will still go on and find my documents, get my pay slip, get whatever you want from the ATO, and I'll send that to you.
Yeah.
But the big middle is they're just a bit too lazy.
That's it.
So they need someone to call them 3 times to remind them.
Yeah.
And that's what a really well-paid broker would not do, but a really well-paid broker would do, but genius might not.
Yeah.
And if I'm busy, that, a great broker would be like, hey, I'll just come over for an hour and I'll stick with you and I'll do this with you.
Yeah.
And you'll get this whole bunch of people that would otherwise not have bothered refinancing. The high-paid broker wouldn't, but the broker genius wouldn't have it.
That's a really good hypothesis. That's actually reasonable to expect.
Yeah.
Yeah.
And that might be completely okay, but then you just need to have more people coming through, right?
Yeah, that's it.
I've got to figure out, how do I catch these super motivated people that are going to want to do the work? And how do I target them, not just the large masses?
Yeah, that's true.
Because traditionally, if you're a broker, you would have thought, let me go target doctors and bankers and, people with lots of high disposable money. They're buying $10 million houses. But maybe with you, it's how do I figure out who is that super motivated refinancer that I don't need to invest a lot of money in converting?
Yeah. Sorry, when you were saying that, just a thought sparking.
Yeah.
Right. I think also like the key variable in all of this is, right? Again, it goes back to customer lifetime value. So let's say if you're a high paid surgeon and if your property portfolio worth $10 billion, then paying $500,000 to a broker is still probably worth it, because if he's servicing a whole bunch of life. So it just depends on that. But you're right. The business model will be very different, because then effectively if I'm just targeting people who are super lazy and somebody has to go there and kind of, do all the paperwork for them, is going to be quite different. It's going to be less automated versus what I'm thinking is more automated, more UBAC.
Yeah.
More self-service.
And I mean, it's not so much the surgeon versus the clerk. It's which of those clients are going to do the work for me so I have a low cost?
That's true.
And some of them you make a lot of money from. You surgeon, $10 million house, you make a lot of money from.
Yeah.
The local bank teller you make less money from. But you need to pick out
which ones are motivated to do it by themselves. You're right.
Yeah.
The profile of people who are happy to do it by themselves, and how do I find it?
And I'm going to guess, and this is I know some of you think this hypothesis resonates, that the higher the loan value, the less motivated they have to do it themselves, because they make more money, they spend more hours working probably. And I find if you make a lot of money, you don't need to be as financially astute. You don't need to save 10 grand a year on something.
Yeah.
You can just totally forget about it, and it hides away the way.
Maybe.
So you might get stuck with these smaller customers, the $1 or $2 million loans, not the $4, $5, $10 million loans.
I'm trying to think about it, right? Sorry, I haven't thought about it. So I'm trying to.
Because when you're poor, you always think about money.
Yeah.
Like you remember back in your uni days, right? When you didn't have any money, like every time you bought something, you always thought about it.
Yeah.
And now when I buy a coffee, I don't think about it. I didn't ask him how much it was. You just forget it. You got money now.
That's true. I think the only thing which I think about is because the 4 or 5K is not fixed, right? It's a percentage of how much so if you have a $10 million portfolio or a $5 million portfolio, you're not going to say 5K per year. You're going to probably spend 15K per year.
20, 30K.
But again, is that worth your time? Yeah. Is a question I haven't thought about. I mean, remains to be seen.
Well, it's not an objective. Is it going to? Let's say you got $10 million.
I think you're right. Attitude towards money will change if you have enough money to not worry about what's that stuff that 15K going to do to me.
Yeah, it's worth the effort. Then someone else with a $10 million portfolio wants to totally say $50,000 a year.
Yeah, so
they'll totally do it. Yeah. Or if you're asking me if I got 0.2%, as much as I love my private banker, I'd shove him to the curve. Yeah. Because no matter how much money I have, I always want to save a bit of extra.
Yeah. Yeah. So I
But
mean,
you need to find,
maybe I should find you and your friends.
well, I think you need to find those kind of people.
That's true. That's true. And the question then is, how do I have the marketing refined to find those kind of people?
Yeah.
Yeah.
Because that's what you want. I mean, sure, your 10 friends, your family and friends, but your next 20 to 100 that you go spend money trying to acquire, what you're actually trying to do is how to acquire the ones that are most likely to convert.
Yeah.
And I think the stuff you said before, loan value, I don't think that's relevant. I think it's, how much effort are they willing to do? Do they see a bit of value in saving a bit of money? And are they going to be easy to convert?
Yeah. I think you're
They're the criteria.
That's the criteria. That's true.
And are you going to be able to convert with the cost base that you're happy to hold?
Yeah. Yeah. What's the cost of acquisition and then cost of retention?
The cost of the broker genius, the cost of your time,
Yeah.
cost of the assistant. Because if they take, 10 visits, well, it might not be worthwhile because the broker genius could go me 10 other customers kind of thing.
That's true. Yeah, that makes sense. That makes absolute sense.
Okay. So maybe to go back to the original question, maybe the original question you changed, right? Not so much how to get my first 10 is the next set. How do I figure out which customers are going to convert?
Which customers are going to convert? And then the ones that convert, what's the cost of processing them and keeping them happy?
Yeah. And my only last question there though is, so the first 10 makes sense, you'll process them. Why not do the next 20 at the exact same time?
That's a good question. Why I want to try and do this?
Well, what if they both?
Yeah, I'm not really opposed to doing both at the same time. I mean, the only constraint right now is how many can I potentially service?
Yeah.
While not keeping people waiting because nobody likes to wait. I think that's it. And the other thing is, actually, you're right. I mean, you're right. I think it's an artificial constraint. You're right. Why can't I do both at the same time?
I mean, chase them both, yeah.
Yeah. And then see whatever comes through and then go through it.
Because you'll figure out sooner.
That's true.
Yeah. And you'll figure out sooner, this broker genius model. Because for the first 10 friends and family, you'll treat really well because you like them and you want.
But what about others? Yeah.
And if you've worked in AWS, many years ago, I'm sure how to work hours. How to run your hour, right?
Yeah. Grinding hours is not a problem.
Yeah. And look, I'm sure I didn't go to sleep without if there's any email unanswered, I won't go to sleep. I'll just get that all done. I'm sure it'll be the same with you.
That's true.
And if you need an offshore Filipino assistant, get
that's true. I think that makes sense. Try and front load the work so that you can figure out where it's landing.
So I think that's what you want to do. I get loading yourself in gear till October. That's great. So you got some time box yourself. I reckon there's something to it, but I think you want to figure out learnings very, very early on in the year.
That's true.
You want to figure out Jan, Feb, March. This is what not working. Because what you might find is saying a lot of words, but actually a lot more cash and investment, either personally or certainly, to build the AI system very quickly.
That's true.
To make this work, or hey, to find these nuancy customers that I need, it's not, $1,500, it's $5,000 per customer.
Yeah.
And it's actually still worthwhile over 3 years, but I've got a huge couple out there up front.
That's true. That's true. I mean, that needs to be seen. I don't know what I do.
Yeah. And I think you want to front load that learning.
Yeah.
Because you don't want to be learning that come August, September, October.
Yeah. I mean, yes. It's just everything we decide, right? The earlier the front work, yes, you save costs in the longer run.
Perfect.
Yeah.
Anything else you want to ask for?
Anything else? I'm finding this very useful. No, maybe we should have another chat,
Yeah, totally.
Yeah.
We should catch up again, 6 months' time, right?
Yeah, and have a little conversation. What I've done, where do you go from?
What happened to broker genius? It's so I was to hypothesize. Let me hypothesize, right? So you'll get your 10 friends and family. You'll over service them. You'll totally get them on board. You'll get your next 100 leads through. I think where the hardest problem to solve, which I don't think you'll solve the first time, I don't think anyone would solve the first time, is how do I find those customers that are going to suit my number?
Yeah.
And I think you're probably churning through months and months and months of trying to figure out how do I target that person. And the symptom will probably be is you'll have the broker genius who'll be paying them an $100,000 base, $50,000 commission. They will just not win many deals, or they'll have a low conversion rate.
Yeah.
And then you're going to have to untangle, is it because I'm marketing wrong?
Or it's the person.
Is the person wrong? Because you only have one person, right? You won't have 10 people to start with.
But isn't that the same thing? Because if I'm marketing wrong or the person wrong? Is it that the symptom of the same thing which you're saying, that I'm getting the wrong sort of person through?
No, so the analogy I'll give is if you're an AWS salesperson, you're going to do what?
Yeah.
Like, even if you're crap, you're going to do what?
Yeah.
Because everybody knows the brand, you get so many incoming calls. If you're an AWS salesperson for startups, oh my God, how will you not smashing it out?
Yeah.
So if your marketing is fantastic, even a sub broker will do well. But that's where you're going to have to untangle. Like, is it the marketing is right, or is it the broker right
issue? Yeah, that's true.
And one way to do that is, as you bring your 10 friends and family, so what are you thinking about getting a broker on board? Like, what months that you mentally?
I would probably start looking for their end of Jan, because if taking a month higher and then have them on board, like, by end of February, March, kind of start frame.
Because it might be worthwhile saying to your friends and family, like even like your very close family, you don't do it, like your brother-in-law, sister-in-law, something like that. You actually get the broker to do it.
Yeah.
Because you'll find as soon as you sit on the side that you'll overserve the client.
That's true.
But you want someone else to experience the broker and see if they can actually convert them, and then give you a call back and be like, hey, they were good, they were bad, they were bad.
And the other point of view, you're right. I think the other flip side of the point is, even if I'm not servicing them well, they're not likely to complain to me, right?
They're just going to be nice to you, right?
Yeah, they're going to be nice to me, even if I'm probably not doing a good job, versus they will be more honest if it's not me and somebody else.
And you can couch, let's just say you're signing up for father-in-law, right? So or you're signing up for that. You could tell him, hey, I've got this broker. Tell me what he's like, right?
Yeah.
What works, what's not working.
Get feedback from them.
I'm going to be purposely hands-off. I want to see if the system works.
That's true.
Tell me what happens. And then come March, April, whenever they join, you can kind of learn that pretty quickly. So that's what I reckon is going to happen. I reckon you're going to have this conversion trouble.
Yeah.
I reckon you find it hard to catch those people, because I think he's got to iterate 30 times on that kind of thing, right? He's got to keep trying different stuff.
That's true. Do something lands.
And then you'll have a cost base you've got to be dragging. You just got to make sure you fund on the way through, and you get cost too high.
If that makes sense.
Yeah. Cool. Anything else you want to ask?
No, not at the moment. I think that really helps solidify the next set of roadmap.
For so many time.
Yeah.
It's exciting
for us and you.
And if you get it right, this would be great. This would be huge, right?
I mean, yeah. This has the potential from anywhere from being, like the Amazon for financial services, like it goes really well, to like corporate SaaS business. Like it could, or it can't work at all, we'll see. As range of possibilities.
Yeah. No, makes sense. Perfect. Well, last thing from my side, the question I asked all the guests, what is something that you always knew to be true that you later found out wasn't?
Oof. Like regarding the business, or just
in life generally, or even like your Amazon trend, you're there for quite a long time.
Yeah.
What's something that you always knew to be true that later on you found was not?
Let me think for a moment. This might seem very kind of obvious. So I had a good academic background, and I've always thought like good academics equals success.
Yeah. And
this was not Amazon. I think I realized it very soon in working life that good academics doesn't equal success.
It's a very, very loose correlation.
It's a very loose correlation. Yeah. That's what I really found.
I think what it might be, good academics is a symptom of working hard. And working hard does really well in work, in real life.
Actually, what I have found, which I hadn't thought about, this is kind of a more serious question. What I found works better in real life is people with good people skills far better than people who are academically successful sometimes.
Sure.
And simply because of the fact that I think a lot of academic success is dependent on individual performance. And as we all find, life right to higher up you go in the ranks, it's about people.
Yes,
you manage teams, and only like anybody is going to be really, really, let's say, successful in any way, powerful, wealthy, anything. You need to be able to work through teams
to make people do something.
And that's people skill, which I don't think economics really teaches you unless when you focus on.
That's ridiculous. It's all individual contribution.
It's all individual contribution. And I think sometimes that actually does you a disservice because you feel like a lone star can do it versus,
needing a team, committing on this. Yeah. Perfect. Awesome. Right. Thank you very much. Thanks for your time. Very nice. Sorry. No worries. It's too metal.
Thanks for listening. I hope you enjoyed it. if you do want to be a guest, make sure you hit me up and do follow me on socials and make sure you check out future episodes. Thanks, guys.